welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, UP has been modified and the electoral tsunami, as it's being called, has lifted equity markets to all-time highs. So as the Nifty and the Sensex flirt with some pretty dizzying levels, how do you play the rally? What are the top mutual funds and the best stock bets that can drive your portfolio returns and maximize your wealth? Well, that's exactly what we're going to be discussing on this show and this edition of Money, Money, Money. And joining me to do that are personal finance experts Hemant Rustagi and Kalpesh Ashar, as well as market expert Prakash Diwan. Prakash, we've got you on the Money, Money, Money chair today because that's what it's all about, making more money.
Absolutely.
As the market hits these historic levels. So the one question on everybody's mind is there more to go or not? In fact, before I get you to answer that, I think we have a first caller on the show because Money, 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 very interactive. We try and answer as many of your queries as possible. We have Tarun Gupta joining in from Delhi. Hi, Tarun.
Hi.
Okay, so what's your question? Are you an avid investor in the stock market? Do you invest via funds or stocks? What route do you follow?
I actually follow the equities, the share market. So I just wanted to know, I just wanted to invest 50,000 rupees for long term. So what would be the right time to get into the market? Is this the suitable time?
Oh, you're asking that question, right? Timing this market, is it right or wrong? Or Prakash, the hardest question, I'm gonna let you answer that. 50,000 at all-time highs. Wait, get in now. What's the sense?
So, classically, the answer is for long-term investments, any time is a good time. It's always been proven in hindsight that timing is difficult and to the extent that it's rendered futile. So if Tarun is probably, wondering that he's missed out of the rally and the good times have gone past, let me assure him that even the FIs have a left-out feeling. Today they bought stocks worth 4,000 crores, whereas the DIs have been actually also booking profits because they started much earlier at 7,900, 8,000 levels. So, it's all relative in terms of when you start and when you exit. You hold on till the company does well, till the investments start, they continue doing well for you and delivering what you expected out of it. So I think there's never a good time, a bad time. It's just when you have the money, you invest. When you need the money, you take it off. And I'm sure our experts on the mutual fund side will ratify that philosophy. Importantly, it's a stock-specific market. Today, if you see Nifty, the Sensex were up almost 0.25% to 2% kind of a move, but the small cap, mid cap was not yet as frothy. So you still have a lot of space there. You still have a lot of headroom for growth, re-rating for new sectors, new names coming in. And they need to continue watching you guys.
Okay, well, we've been getting a lot of global opinion as well as far as global brokerages are concerned, global fund managers are concerned. So what is their view on India? Will this Dalal Street party continue? Here are some views.
India, because of the domestic demand story, is by a long way, in my view, the most exciting emerging market equity story in the global context. In the short term, China is way cheaper than India, so there's been a trade going on in China, and it can definitely outperform India in the short term. But in the long term, I'm very much structurally overweight India. I have more than 50% of my long-only Asia ex-Japan portfolio, which is like 25 stocks in Asia linked to macro themes in India, but I'm very much focused on the domestic demand story in India.
We're very positive on emerging markets, which obviously includes India. We think we're at a very early stage of a recovery in the relative performance of emerging markets versus developed markets. We expect flows which have been outflows, if you look at open-ended funds, 13, 14, 15, and only basically neutral in 16. We think flows could be very positive this year, next couple of years, as people return to EM because it's offering premium growth. And India will get a share of that story. So I do expect India to move higher with emerging markets.
I think it removes one of the concerns that the market has, that if you had an unfavorable election result, then it could cause market to sell off. I think, you've had enough scares along the way. Demonetization obviously was economically hurtful for the economy short term. Now with the political backdrop becoming more favorable, I think it gives investors the opportunity and fund flows the opportunity to take this market up to levels which would probably suggest that valuations could go well above historical averages, and I think that's where the market is now headed.
Okay, so largely positive views. Still, a lot of faith being kept in the Indian equity market. The question is, how do you play it? We'll come to stocks in just a bit. But if mutual funds are the route that you prefer, then we've got two experts in the house today to tell you about 5 top mutual fund ideas. So, Hemant, I'm going to start with you first. What sort of 5 funds have you selected, and on what basis?
See, basically, to begin with, I've selected 2 multi-cap funds, especially those that have bias towards large cap, because I believe that, in terms of valuation, they are quite attractive. The second thing is that it depends on the kind of investor you are. If you are someone who is looking to build up your portfolio, you shouldn't be investing with a lot of aggressive funds. Okay, so the first fund is Birla Sun Life Equity Fund. This is the fund, like I said, it's a large cap-oriented multi-cap fund. This fund invests in those companies which have competitive advantage in the industry. And the fund manager has been quite smartly able to kind of, allocate money to different segments of the market. And this fund has consistently been outperforming its benchmark and the peer group.
So I'm just looking at the past returns. I mean, not to say that past returns will guarantee future performance, but 34% over the last 1 year, 24% 3 years, 20% 5 years. Are you expecting, this sort of stable performance to continue with that?
Well, yes, this fund has been performing consistently over the longer period. So there is no reason. This fund has proved, because you've seen many ups and downs, and the fund has performed consistently. Okay. So you can expect the fund manager to perform consistently even going forward.
So that's 1 down, 4 more to go. Top
The second one is Kotak Select Focus. This is again a multi-cap fund, large cap oriented. This again is a fund which invests in those sectors which are likely to outperform the broader markets. And in keeping with that, this fund takes a concentrated bet in certain sectors. But in terms of stocks, it's fairly diversified. It usually has around 45 stocks. And I believe that this fund has a potential to be a part of the core portfolio of every investor who wants to invest for the long term.
Where do you rate it in terms of the risk category?
Well, like I said, it's large cap oriented, so it's more focused on the large cap. And it's fairly diversified in terms of stock. So I believe that, even if someone wants to start investing, he can start investing with this one.
Okay, I have your list here with me, and the next 3 funds seem to be slightly more on the aggressive side. So high risk, high return funds.
Yeah, absolutely. The next one is DSP Small and Mid Cap. As the name suggests, this fund invests in 2 aggressive segments of the market, small cap and mid cap. In terms of valuation, you can say that right now, valuation looks a little overstretched as far as these 2 segments are concerned. But I think it's always advisable to have at least one quality mid and small cap fund in the portfolio. Basic differentiation between different funds in this segment is stock selection. And I think here this fund has proved over a period of time.
So you like the fund managers?
I like the fund manager. I like the stock selection. Like I said, that's the key for a small and mid cap. So obviously, because being aggressive, you need to be very careful in terms of how much money are you investing in such a fund. So I would say maybe 10 to 15% of the portfolio can be in mid cap and small cap segment. Okay,
this fund's given a 39% return over the last 1 year. So pretty aggressive small cap and mid cap fund. The last 2 for you.
The next one is L&T Infrastructure Fund. And I think there are quite a few reasons I believe that, someone who can take risk should be looking at this fund. One is, unlike many, so-called infrastructure fund, which are nothing but diversified fund, this allows investors to benefit from pure infra play.
But the market's been talking about the return and the revival of the infrastructure cycle for a while, and that's why if you look at the 5-year returns on this fund, it's been a bit of a non-starter because, the whole capex recovery, etc., hasn't really happened. So you're expecting that to change and this fund to take off?
I do, and that's a risk, obviously, when you go into a fund like this. It's a thematic fund. And it is quite possible that a certain thing may not work for a prolonged period in the market, so you need to be very careful there. So I believe that, that's one reason I said. The second is, we have seen the renewed focus on infrastructure in the union budget. And with this kind of mandate, I expect that the government will do more infrastructure spending. So I believe that someone who can take risk and understands what comes with it can look at L&T Infrastructure Fund.
Very quickly, after infra, what's your last fund, the top 5 from Hemant?
It's ICICI Banking and Financial Services Fund. What all is going to happen in infrastructure space, the focus on affordable housing. I believe this is one fund which is going to benefit from that. It has a good mix of banks, NBFCs, and also housing finance companies.
Okay, we need to take a really quick break on that note, but on the other side, your questions answered. You will get 5 more fund ideas and Prakash's 3 top stock bets if you want to go the direct way in the equity market. We'll be right back. Welcome back here with Money, 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 the equity market special. How to play this market when it is at all-time highs. What are the stocks? What are the funds that can multiply your wealth? We have a caller joining us on the line. I think we have Akhil Kumar joining in. He's a Bengaluru resident. Hi, Akhil.
Yeah, ma'am. Hi. Good evening.
Good evening. What's your question?
Yeah, my question is, I would like to invest in mutual fund. Okay, I'm just beginner.
Okay.
As of now, no tax exemption for me, and I'm just 22 years old.
Okay. You started young, that's great.
5,000. Sorry?
Okay, so 5,000 per month is what you're looking at investing. Well, one of our experts has already given you 5 fund ideas. Now we'll toss this to the next expert. So Kalpesh, he's a young person, 22. He's just starting out. What are the specific funds you would advise him, and overall your top 5 for this market?
Okay, so first of all, congratulations to him for starting so early. The first thing which I would like to tell him is that set a goal for this fund. You'll be more focused. And I think 5,000 not being a very big amount, I think the first steps should be tread with caution. So he could probably divide this amount between 2 funds and have a large cap fund, which is probably a Birla Sun Life Frontline Equity Fund, and a balanced fund, which is ICICI Prudential Balanced Advantage Fund. So with these 2 funds, probably he could make a foray into the mutual fund space and do it regularly with discipline.
Okay, so those are specific funds for him. Are these also on your top 5 list? What does that list look like?
Okay. So the way I have put my top 5 fund category is that I have put 2 multi-cap funds. I have put 1 mid-cap fund, 1 small cap, and to probably hedge the risk which is in the top 4 funds with a balanced fund. So the 2 multi-cap funds which I have put are of diverse natures. So one is the ICICI Prudential Value Discovery Fund, which is probably by the corpus size today around 16,000 crore. And it is one of those unique funds where the fund manager, I think for a long time now, has been taking quite contrarian calls.
Okay.
And he has not been chasing growth. And it's to his credit that the calls have been coming out right. So ICICI Prudential Value Discovery, as a matter of fact, is a fund which is almost 16,000 crore. And being a multi-cap fund, it has the leeway to shift between the mid-cap and the large-cap category. And so far, probably, if I'm not mistaken, last 2 years, it's been sitting heavy on the large-cap space. So it's got almost 80% presence in the large-cap stocks and 20% in the mid-cap stocks.
Okay, so now fund number 2 and 3 for Kalpesh, actually there's an overlap. So both our experts are agreeing on these next 2 funds. You've also picked up Birla Sun Life Equity and DSP BlackRock Small and Mid Cap, the same funds that Hemant picked out. Why do you like these 2?
Yeah, so exactly the opposite of the ICICI Prudential Value Discovery in the same category is the Birla Sun Life Equity. And that's got a corpus of around 4,000 crore. So it's a very decent medium-sized corpus, and I think Hemant has already highlighted the virtues of that fund. It's again a fund which is a little bit of deviant from the value discovery, which is it runs on the growth philosophy of investment. So it chases the momentum thing. Also, certain value stocks are imbibed in it. The large cap component also is 67%, bit lesser than value discovery there, and 33% in mid cap. So I've taken a little bit of a diverse nature of multi-cap categories with a predominantly large cap exposure.
Okay.
The third fund, which is the DSP BlackRock Small and Mid Cap, I think it's due credit to the, I would say, the distant cousin of this fund, which is the most famous, I think everyone knows about it, is the DSP Micro Cap Fund. But because of the fund size of that fund, which has now stopped taking subscription, it is now the funds more or less are the same reflection in the DSP Small and Mid Cap Fund.
Okay.
So, but still this remains more of a mid cap dominant fund. The fund manager, to his credit, has managed this brilliantly.
While past returns obviously have been phenomenal, I mean, what should an investor keep in mind from the risk-reward standpoint, so particularly for the mid and small cap funds?
Yeah, so for the mid and small cap fund, I think it's in the hand of the investor. It's his allocation to that funds which determines his risk. So he should not be too gung-ho about the entire thing and balance his portfolio.
Sure.
Because where he needs to take a risk, he should go all hands down and take a risk into it. But the main feature of this fund is, I would say, the credibility of the fund manager who has managed this fund since 2012. And one more thing, Surabhi, which I have done is in all these 5 funds which we've highlighted here, all the fund have been in existence for last 5 years.
Sure.
And all the fund managers have been managing these funds for 5 years.
So I mean, a decent sort of history and track record.
Yeah.
Quickly, the last two funds that you like.
Okay, so the fund after that is, I think, one step below that, or I think higher than that, is the Reliance Small Cap Fund. And that is a pure risk taker. So if you see that portfolio, it's got almost 63% in small cap, around 30% in mid caps. So it's a very, I would say, risky fund. But again, if you see the track record, although track record need not go by when we select a fund, it's managed the negative periods of 2011 and 13 quite well. And it also is managed by one of the front leading fund managers of our country.
Sure.
So it's got a good pedigree.
Okay.
And in our portfolio, I've given it around 20% allocation along with the small and mid cap DSP fund.
And just to be a little safe, you've also thrown in a balanced fund in your top 5.
Exactly. So
what sort of returns would you expect from it?
So a balanced fund, I would be happy with a decent 12 to 13% type of a return, probably having a large cap exposure. And for that, I have kept ICICI Prudential Balanced Advantage Fund, which also has a leeway to go into derivatives, arbitrage, and the equity segment. And it works by the price to book value ratio valuation. So probably they do the rebalancing on a daily basis.
Okay.
So whenever there is an equity which is high, they sell. And whenever the equity valuation is low, they buy.
Okay.
And the debt component in it, unlike some other funds, they have a very decent mix of duration and accrual.
So, Prakash, obviously people have been listening to advice like this throughout the year because it's all of these funds and all the money that they've been pouring into the stock market. Do you have any preferred fund managers or any preferred styles? I know you don't look at mutual funds, you do it the more direct, exciting way. But just any thoughts if you would like any sort of investment styles?
No, I think what both of them mentioned about the DSP, small and mid cap, just as an illustration, you know, the performance of some of these mid-cap, micro-cap, small-cap funds has been so stellar that at times I really wonder the effort that we put in identifying stocks, whether that's redundant. And then with 45% kind of return in 4 or 5 years CAGR, it's remarkable. So I think the fund industry has done a great job in terms of de-risking people from the equity side, asset allocation side, and they've taken on the entire burden of managing the volatility with the FI inflows and outflows. You know, if the DOMs weren't active and so big, thanks to people listening to you, we probably wouldn't have been, so gung-ho about whatever sweep that we are talking about.
Okay, we'll need to take a very quick break, but on the other side, if you have the risk appetite and you want to get into this market via stocks, Prakash has 3 interesting bets for you. Welcome back. You're with Money, 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 and this is the equity market special. We've been getting lots of queries on what funds, what sort of stocks to be in. So, for instance, Santha Kumar wrote in to us. He's from Coimbatore. He's a professional who's 34 years old. He wants to invest 30,000 rupees for the long term. He's looking out for a good stock. So, Prakash, that brings me to you. Please help out our viewers who want to get into stocks.
Yes. So that's the excitement portfolio, not necessarily the money-making one, but I think given the high levels that we are at, as I said, look for stocks that have not yet participated. And infrastructure, we spoke about infrastructure, L&T Infra is what Hemant was referring to. One of the companies that I really love out there in terms of its positioning is JKIL.
J. Kumar
Infrastructure. Now that's, if you see the balance sheet's pretty healthy, under-leveraged as compared to the other players. And it specializes in urban infrastructure.
Yeah.
Now, with the kind of mandate that the NDA has got, and particularly the BJP-ruled states are going to set an example for good governance as a run-up to 2019, I think urban infrastructure will undergo a sea change. There is one company that will participate very well, and I think will get re-rated. So the EPS might move about 6 months later, but the PE will start moving first.
The stock's already run up from its August lows of some 100 odd. I mean, I think it's what?
So August has been a distant past now. But today, if you see, it's kind of just taking off, and we in Bombay see more of it because it's all over the place.
Every second project, you see those boards.
But that is the area of specialization because infrastructure is going to be more urban in orientation. So you could look and buy on dips. I'm not saying go out and buy it tomorrow.
Okay.
You'll get chances in the next week, 10 days, whatever. So you have so many events coming up, and I'm sure the equity markets markets are very favorable when you see such an eventful week in front of you.
Okay, so that's one. Then the other two ideas?
Yeah, the other area that I feel that's promising enough is within this pharma space, there's been a lot of negativity that's brought things down. Notwithstanding the headwinds on the US markets, I think there's one company called Unichem, which is really much more insulated from the competitive forces on the generic side and especially the cost pressures. That's one stock that's kind of not yet participated the way a Cipla and a Sun Pharma and Lupin have. Probably it's smaller, of course, much smaller, so you could look at that very actively.
Your third pick, NFL, this stock has skyrocketed in the last few weeks.
Yeah.
What is happening?
No, so, if the government is going to go and implement the doubling of farm income and rural upliftment and stuff like that, you will have to do something in fertilizers. And the big paradigm shift is going to be the DBT. Now, what's happening is the DBT is a big gorilla in the room. Somebody needs to bell the cat, talk about tough things. With UP under the belt, I think they have a better chance to do it. And now the BJP states, rule states are about 54% of our population, which is good. So you can implement these tough measures, see the results in 2 years. Fertilizers will do well. NFL, as you said, is one of the best plays there. Buy it on dips. Again, as I said, don't buy at elevated levels, but keep these, make a list and keep them in your pocket when you sit with a broker, recall these names and buy them.
All right, gentlemen, thank you so much for joining in and helping out our viewers with ideas both on mutual funds as well as stocks. That's it on this equity special. Thank you for being with us on Money, Money, Money.